Hi everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we're diving into a preliminary proxy statement from Cars.com Inc., also known as Cars Commerce. This isn't just another dry document, it's a sneak peek at what's on the table for their upcoming shareholder meeting. Think of it as a behind the scenes look at what the company's big decisions are. What we find in this report could steer the company in very interesting directions and even get their officers into or out of hot water. So let's buckle up and decode. Cars Commerce wants your vote on some pretty important stuff, including who sits on their board and how they pay their top executives. They're holding a virtual meeting in June, but they want you to vote now. It's all about electing directors, approving their accountant, and even deciding if officers should be shielded from certain lawsuits. They are even asking for your opinion about the executive officer's compensation, which is a vote called Say on Pay. And there is another vote regarding the frequency of future Say on Pay votes. Buckle up, we have lots to unpack here. The chairman, Scott Forbes, reminds stockholders that their vote is important, regardless of whether they plan to attend the virtual meeting or not. Let's get straight to the point. The annual meeting is scheduled for June 4, 2025. The board recommends voting for all of their proposals, including the approval of the amended and restated compensation plan. There are 6 items of business that they want stockholders to vote on. Don't worry, we will walk through the details on those shortly. First, let's briefly touch on corporate governance. Cars Commerce highlights its commitment to promoting long-term stockholder interests, strengthening board accountability, and building public trust. They lay out some key governance practices: annual director elections, independent board committees, no poison pill, and stock ownership requirements. They seem quite proud of the fact that 10 out of 11 of their directors are independent, which is about 91%. The company has a separate chairperson and CEO, a leadership structure that the board feels allows each to focus on their strengths. The chairperson focuses on the board and strategic direction. The CEO can focus on day-to-day operations. The board also gets an outside look because the chairman is independent. Speaking of independent directors, the board has determined that all directors are independent except for Alex Vetter, the CEO. It's pretty standard for the CEO not to be independent since they're employed by the company. The board currently has 11 members. The ESG committee reviews the board size and composition. Alright, let's talk about electing directors. There are 11 nominees and the board wants you to vote for all of them. They are the people in charge of providing oversight of the business and counsel to management. All were elected in the prior year. The board talks about having a mix of opinions, experiences, and backgrounds. Currently, the board is made up of mostly men, mostly white, with an average tenure of 7.3 years. Let's check out some of the nominees. Scott Forbes, the chairman, has decades of board experience with online marketplace brands. Jerry Devitt has tons of marketing experience working with companies like Office Depot and Nokia. Jill Grenflaw has financial and investment banking experience previously working at Blackstone. How do these non-executive directors get paid? They get an annual cash retainer of $75,000 plus some extra cash for committee meetings, plus stock awards, of course. It comes out to around $255,000 to $355,000 per year. Now for the juicy part, executive compensation. It's designed to align the interests of executives with those of stockholders because everyone wants to see the share price go up. It focuses on pay for performance. So how did they do last year? In 2024, revenue hit 719.2 million DIN, up 4% year over year. Net income, however, fell from $118.4 million to $48.2 million. On the bright side, adjusted EBITDA, a measure of profitability, increased to $209.7 million. Here's a fun fact: adjusted EBITDA for 2024 was $2,009.7 million, or 29.2% of revenue. Compared to $19.4, like management is saying that revenues are up while profits are down. You should keep this in mind because it is the criteria Cars Commerce uses to measure performance relative to the short-term incentive plan. Their executive compensation program is all about attracting top talent, aligning interests with stockholders, and rewarding both company and individual performance. It's a mix of base salary, cash incentives, and equity-based compensation. At their last annual meeting, almost everyone approved their executive compensation. So it seems like stockholders are happy with the pay packages, at least for now. About 98% of stockholders approved, which is quite a vote of confidence. Here are the main pieces of the executive compensation puzzle: base salary, short-term incentives tied to performance, and equity-based awards. The goal is to get everyone rowing in the same direction towards increasing that share price. To make sure they're paying their executives fairly, they hire compensation consultants. In 2024, they used Korn Ferry. These consultants help them figure out what other companies are paying and make sure their compensation structure is competitive. The report lists their peers, which are other companies they compare themselves to when setting executive pay. You have companies like TripAdvisor, Yelp, and TrueCar. There are about 15 companies on this list to compare their financials with. A lot of their executive pay is at risk, meaning it depends on how well the company performs. The CEO's pay is heavily weighted towards equity, which is said to help align his interests with stockholders. The base salaries didn't change much for 2024, other than for the Chief Legal Officer and the Chief Product and Innovation Officer. The report breaks down how the short-term incentive plan works, their financial bonus. The payout is based on both company performance and individual performance. The biggest component of the bonus is based on achieving adjusted EBITDA and revenue, but the actual numbers are not that great because they got only about 47% based on both the revenue and EBITDA calculations. Cars Commerce wants its leadership to hit long-term operational and financial goals to align with the stockholders. 62.5% of the CEO's total equity grant is based on long-term performance metrics, correlated with an increase in long-term market valuation. So what did the CEO get? $6,000 in long-term incentive awards. On top of that, he got a one-time PSU award to move his pay closer to the median for CEOs in their peer group. Let's briefly talk about risk. At Cars Commerce, cybersecurity and information security risk management is of critical importance. The audit committee provides strategic oversight for those risks and gets regular updates. The compensation committee usually approves equity awards at its March meeting after the annual report has been released. Cars Commerce ensures that it is never time to take advantage of material non-public information to give benefit the executive. Here's a look at the actual compensation numbers from the summary compensation table for the top executives. Let's start with Alex Vetter, the CEO. His salary is $750,022. Total compensation comes out to $9,022. Total $1,509,531. $1,021,072. Not bad if you can get it. Sonia Jane, the CFO, gets $557 and $509,500. $1,000 T3. Compensation comes out to $9,500 and $53,090.59 and $22. Donut Tiffany $1,163,090.51,072. Not bad if you can get it. Sonia Jane, the CFO, gets $557 and $509, totaling $3,163,090.59 and $127.63,090.59, totaling Tommy $903,090.51,072. Not bad if you can get it. Sonia Jane, the $60,090.59. The report includes grants of plan-based awards in 2024. These are potential payouts and can vary wildly depending on the company's performance. Matthew Crawford, for example, has some equity awards tied to the performance, with a value that ranges from $3,170 depending on the achievement of the company during 2024-2026. This table shows stock awards vested in 2024. Alex Vetter got 110,590 shares with a value of over $2 million. So these are the shares they actually got. What happens if an executive leaves the company? The severance arrangement section lays out the details. There's a change in control severance plan and an executive severance plan. These plans outline what executives get if they're terminated without cause or leave for good reason. That said, here are potential benefits to the executives during termination. Alex Vetter can possibly receive over $20 million from qualifying termination. They seem to mostly be on the up and up, except for one late filing from Matthew Crawford due to an administrative error. Now let's move on to the accounting firm Ernst & Young LP. The audit committee wants you to ratify their appointment. This is pretty standard stuff, but it's important for transparency. The fees paid to Ernst & Young totaled to a little over $1.7 million for 2024. The audit committee provides oversight of the financials. To their credit, they seem on top of things, and it is definitely needed. But as mentioned before, there are two proposals to vote on regarding executive compensation, namely the say on pay votes. And finally, they want you to vote on how often you get to vote on executive compensation. Do you want to do it every year, every 2 years, or every 3 years? The board recommends every year. Let's move on to the meat of the report, Proposal 5, a vote to extend and amend the Omnibus Incentive Compensation Plan. They want to increase the number of shares available under the plan by 4 million, extend the term, and expand who can administer the plan. More shares, bigger pie for everybody. The 3-year average from 2022 to 2024, the gross burn rate, how quickly they issue shares, is about 3.78%, and the share overhang, the percentage of stock allocated, is around 8%. As a reminder, they break down the potential tax consequences for the company and the executives, which depends on the type of award. The final vote is on exculpation of officers. Basically, they want to amend their corporate charter to shield officers from certain lawsuits. It's like insurance, but for getting sued. It might sound confusing, but really they are just trying to add a provision to their corporate paperwork that would protect certain officers from personal liability in some cases. In the end, you get a bunch of questions and answers to help make sure you understand what you're voting on and how to participate in the annual meeting. And finally, if you want to get something on the agenda for next year's meeting, get those proposals in writing to their corporate secretary before December 18, 2025. So after waiting through all of that, what's the story here? The company has to balance its goals of growth and profits while keeping all of the stockholders and its executives aligned. Now, looking at these results more broadly, Cars.com Inc. appears to be doing reasonably well, but as with all companies, they are not without risks. The decline in net income raises some concern that the costs will continue to go up while revenue growth stagnates, which is why they have the say on pay proposal. Make sure you take the time to read through that sign. Thanks for watching. If you enjoyed, please subscribe, like and comment.